How's it going, everybody? It's Daniel Kovach here. I know I haven't produced anything lately, but don't worry because I have a bunch of stuff coming your way on a bunch of day trading stuff like this one where we talk about day trading with Elliott Wave and the Kovach Momentum Indicators. So let's get started. If you haven't already, go ahead and go to the Quant Guy website and sign up for access to the indicators. We're going over the following trade in hindsight, but if you subscribe to our Slack channel at roitradingacademy.com, you can get all these trading ideas in real time. Let's take a look at our stock here. It's Western Digital. If you notice, we gapped down. Market profile enthusiasts will notice that this is a neutral day. And we have this level here on the bottom. I'll get to what the Kovach indicators say in a second. But first, where did this level come from? So if we look at weekly charts, we see that this level was respected way back in 2016. Now, the longer the time frame the level was respected, the stronger it is. So because the level is so strong, it takes a lot of momentum to break through it. So it's likely that that's not going to happen immediately, and even if it does, you're probably going to get a little bounce beforehand. That fact is really the key to this trade. So if you notice here, we have a big bounce off of that level, and if you remember from Elliott Wave theory, the impulse wave often starts off of a correction from something beforehand. The optimal entry point for this trade would be at this level here. If you missed out on this, don't worry because there are plenty of other opportunities to come, and that's where Elliott Wave, Fibonacci's, and the Kovach Momentum Indicators come into play. Remember, try not to enter a trade on FOMO. Wait for the best possible price. This may require some patience and dedication, but it's worth it. First, let's apply the Fibonacci's to our chart. As you see here, optimal entry points can be identified by the Fibonacci levels. These also align with the corrective phases of the first impulse wave. But notice one thing, we're anchoring these Fibonacci's with hindsight on our side. And again, hindsight is always 20/20. But recall that Elliott Wave theory and Fibonacci's are fractal in nature. This means that we should be able to apply the same principles in real time as the pattern is unfolding. This time, let's place the upper anchor of the Fibonacci's at the conclusion of the first wave in the impulse. We know from Elliott Wave theory that we can predict the extent of the impulse wave based on the Fibonacci extension levels. As for the entry point of the trade and the stop losses, we can turn to the Fibonacci retracement levels. Now that we have some ideas for where to enter the trade, we can turn to the Kovach Momentum Indicators as confirmation when we get there. So notice how the momentum dries up here. It's gone down a little bit, meaning that investors have let off the gas. This is telling us that this is a perfect place to enter the trade. Lags or lulls in the momentum indicators can tell us where we can add to the position or enter it if we missed out. That's about all for now. Check out the link to ROI Trading Academy and the Quant Guy indicators in the description. Also, please don't forget to like and subscribe.